Have you ever wondered what drives the value of the Australian dollar, AUD, and why it behaves so differently from other major currencies? Well, today we're taking a deep dive into the unique factors that fuel the odds movements and the key insights every Forex trader should know before entering the market. First off, the AUD isn't just another currency, it's a commodity-driven powerhouse. Australia is one of the world's leading exporters of iron ore, coal, and natural gas. This means that Australia's economic strength, and the value of the AUD, are closely tied to global demand for these key raw materials. When commodity prices surge, the AUD tends to follow suit, strengthening against other currencies. For instance, when iron ore prices spiked, the AUD benefited tremendously. However, when commodity demand dips, particularly during global slowdowns or economic crises, the AUD often struggles. As a trader, keeping an eye on commodity market trends is crucial for predicting the direction of the Aussie. But that's not all. Australia's largest trading partner, China, plays a massive role in determining the value of the AUD. China is Australia's largest importer of commodities like iron ore, and its economic health directly impacts Australia. If China's economy is booming and construction activity is high, Australian exports benefit, and so does the AUD. On the flip side, when China slows down or implements restrictions on imports, the AUD often weakens. Traders should always pay attention to China's GDP growth, manufacturing data, and trade policies, as these factors have a direct influence on AUD strength. Next, let's talk about the Reserve Bank of Australia, RBA, and the role it plays. Like any central bank, the RBA sets interest rates, and these decisions are pivotal for the AUD's movement. When the RBA raises rates, the AUD typically strengthens because higher interest rates attract foreign investors seeking better returns. Conversely, if the RBA cuts rates, the AUD tends to weaken as lower interest rates make it less attractive to international investors. But it's not just about the rate changes themselves, it's also about the RBA's forward guidance. If the RBA signals that further hikes or cuts are coming, that can move the AUD even before the changes happen. Keeping up with the RBA's policy statements and economic outlooks is key for AUD traders. Another important factor to consider is the AUD's status as a risk-on currency. The AUD thrives during periods of global optimism and economic growth. When markets are feeling positive and investors are willing to take on more risk, they often flock to higher-yielding currencies like the AUD. But during times of global uncertainty, whether due to political instability, economic crises, or even health pandemics like COVID-19, traders tend to shift towards safe-haven currencies like the USD, pushing the AUD lower. This makes the AUD highly sensitive to global risk sentiment. For traders, understanding whether the market is in risk-on or risk-off mode can be the difference between winning and losing trades. Beyond these primary drivers, there are other influences that shouldn't be ignored. Australia's trade relationships, particularly with the Asia-Pacific region, its domestic economic performance, and geopolitical factors also play roles in how the AUD behaves. Even climate-related events can affect Australia's agricultural and mining sectors, indirectly impacting the AUD. For example, bushfires or floods can disrupt production and exports, causing short-term volatility. To sum up, trading the AUD requires an understanding of multiple dynamic factors. From commodity prices and China's economic performance to the RBA's monetary policy and global risk sentiment, there are numerous influences that drive the value of the AUD. Whether you're a day trader or planning longer-term positions, staying informed on these factors is essential for making smart trading decisions. And if you want to stay ahead of the market, be sure to subscribe and turn on notifications so you never miss out on our trading signals and analysis.